Investors and traders, welcome to the channel Market Chart Patterns. Today is 7th of March 2025. Hope everyone is having a fantastic day. We will be taking a look at the key US technology stocks for this video, and something really interesting happened today. Although the markets in general, US stock markets and the nasdaq in particular, they have been under a quite a lot of stress, and there has been quite a lot of volatility in the market. But today, some of these technology stocks that we like to follow, they were also making some really interesting patterns at some really key levels. So I believe it's going to be a really key those levels are really key, and they might provide really good price levels from support or resistance perspective. So this is what we'll take a look at. As always, the video is for educational purposes only, and it is not a financial advice. Let's start by taking a look at the Tesla stock. So this is the big ABCD pattern that we had, which forecasted months in advance, roughly about $500 per share level. In fact, I remember receiving not nice comments from someone, which is okay, um, whether the stock will actually ever reach that. And the stock actually had a high of $488.54. So it came pretty close to the actual 500 even level, which is pretty good, given that it was almost a $500 stock. Now, what the stock has done is it has retraced, and it has retraced about 50% of its value. And if you go back right to the point A and you draw a retracement, it has retraced to roughly the low came in $250.73. So pretty much 50%. In other words, it has kind of reverted to the mean. If you just take 500 as a whole number, you divide it by 2, or you take the half of it, so it has just come back to about $250 per share level. Now what is really key is, note, this is really the long-term trend line is still intact. 193 or $200 per share level is where we have this rising channel line, and if you look at the symmetry, this is where the symmetry points to. So where we are, which I'm going to show you on the daily chart, where we are, it's got a pretty good chance to at least a rally from this level. And if that rally holds, that's going to be fantastic. But if it begins to break below the $250 per share level, then I think it will open up the doors to $200 per share level. But where we are right now is, let's take a quick look on the weekly chart. Here we go. So on the weekly chart, you can see that's right at the 89 period moving average, which is fantastic. And then this is where we have all these patterns. So initially we had a very nice ABCD, the red one-to-one price projection in this area of about 320, 330, 340 at that point. And we did get a sort of a rally, which did not last very long because it's 38.2% retracement. It provided pretty strong resistance, and whenever we find either support or resistance from the 38.2% retracement, it happens in strong trending markets. And since this market was trending to the downside, we saw an accelerated move to the downside. There was some reprieve that perhaps this $300 per share level, where we have the 61.8% Fibonacci retracement, that might hold, but with this kind of momentum actually did not even hold as well. But right now we have a confluence of number of things coming together, so it's really a key point we need to pay really close attention to, because we have the 78.6% retracement of this little point D here, which was a low back on the 5th of March. We have this black ABCD completing. This is a one-to-one price projection of this high to this low, projected this from point C. We have this smaller pattern of blue, one-to-one price projection completing nearby, and this finally this big red one where the CD leg is 1.618 times the AB leg. So we have a confluence of number of things coming together. Fibonacci retracement of 78.6% retracement. We also have the 61.8% retracement from a low, which is right here. So a number of confluence of two retracements, pattern is completing around here. So in my opinion, this $250 per share level is a really important level to watch. Now today, Friday, and the market actually closed in positive. At least I can see a positive candle, although it's showing me it was down a little bit. So this is the region we should be watching for next week's price action. If the market begins to find good support, that's gonna be really good for the bulls. And then we'll have to get or wait for the momentum to get better, especially with the 20-day moving average, which is below the 89 period moving average. The momentum is not really great here. Maybe the market consolidates around here for some time, and then the moving averages begin to catch up, and then we could have a nice move as long as this really critical level of $250 per share level is held. Now let's take a look at Avgo, which is in the news. So this is the Broadcom, and here I believe the earnings came out yesterday. I don't know exactly what the earnings were, but what I can tell you is that Avgo actually completed a very nice pattern formation. So we have the one-to-one price projection in this black ABCD. It came very close to the 61.8% retracement on $175 per share level. Which is a retracement right from the 5th of August lows. So as long as this low is held, I think it's got a pretty good chance to rally. So as a first resistance level, we can watch for this 38.2% retracement. And the good thing is it actually closed positive. It actually rallied 8.64%. So this is a pretty impressive rally. So $200 per share level, I think that's on the cards. That's going to be 38.2% retracement. If it's really strong, then a much stronger resistance come around 206. So let me actually highlight it like this, 206. And getting above this 206 level, I think the bulls, it will make the bulls pretty happy actually. The momentum, because the 20-day moving average is above the price, it needs to improve. But we have a nice pattern formation right here, and also if we just draw a trend line like this, you can see that the trend line has also been respected, and we can actually adjust the trend line a little bit and go a little bit further here as well. But this is from this key low of 5th of August, so it's a valid trend line in my opinion, and we have done a nice retracement. Everything is nice from this pattern perspective. As long as the 61.8% retracement is held, I think we are actually likely to go to this 206 level. Getting above this will be pretty good for the bulls, and then we could actually look at an ABCD formation, which would actually take out these highs for this stock. So that's really key. Getting below this trend line, getting below the 61.8% retracement, and things are changing for the stock. It means that there is going to be change of structure once it begins to get below this 27th of November lows, and that will change the picture entirely. Okay, now let's take a look at Meta real quick. So I just want to go back to the monthly chart here, and I just want to point out that we had a target of about 690 roughly, or $700 per share level, because that was this big ABCD formation. I think we had this on the weekly chart shown like this. So the market actually achieved our target and exceeded that. It went as high as about to $740 per share level, and now because our pattern was completed, we were just watching for price action, and we have seen over the course of last 3 weeks a pretty strong pullback where it has come and stalled at the 20-week moving average. So if you look at, this is the previous bigger retracement that in this move higher, the market has actually moved beyond that, which means that the symmetry that we're watching for, it's not there. So it's been a bigger move, more aggressive move. Now if we just move down to the daily chart, what we can see is that it pulled the price pulled back right to this 616, in fact a little bit lower, about $600 per share level. The low actually came in $600.61, but the market actually closed at $625.66, so about roughly $25 higher, which is really good. And the market closed above the 89 period moving average. So the momentum, although needs to improve, but the 89 period moving average has been respected. Now, one of the things I just want to point out is this move has been about 19% to the downside. Let me, yeah. So this is a little bit approximation at the with the highs and lows. So about 19%. And if we look at the bigger pullbacks, we had a 18.54% move previously, and then we have had an even bigger move back in the April of 2024, which was about roughly 22% to the downside. So we are pretty much in the ballpark figure of where the retracements have taken place and completed, and then a rally has actually resumed. This is the absolute amount, and if we just point it from this, if this is the symmetry we could watch, it's pretty much there on the closing basis. So a number of things, pointing to the fact that we are possibly at a really important um, support level, because we have the 38.2% retracement of this low, 5th of, excuse me, the 25th of April low, to the highs which came in on 14th of February 2025. And then we have, these symmetry in terms of percentage in that ballpark figure. So really important. It respects this, and the market doesn't close below Friday's lows. If it does that, then we are going for a deeper pullback. Meta, of course, is a fantastic company, really at the forefront of the artificial intelligence side of things. They're doing a lot of things in that field. So the stock is actually more volatile. It moves quite a bit, but it also gives nice returns, because of the communication side of things it is in, and also the work they are doing on the artificial intelligence side of things. Let's take a look at Apple. Okay, I don't know why it's taking such a long time. Um, so, okay, here we go. So Apple is really, really interesting because it is at a critical juncture. So let's actually go back to the weekly chart. So on the weekly chart, we have this really nice support which came in at the $200 per share level, roughly right here, and then we were looking for a rally, which it did on, and on, I believe on the daily chart it was like an ABCD pattern. It retraced right to the 61.8% retracement, and then it also rallied right towards the 61.8% retracement as well. So it's in a range bound market actually, but it's performing pretty well. So this is easier seen here. You can see that it pulled back right into $220 per share level, and then, which on the weekly chart was a 61.8% retracement. It rallied right into the 61.8% retracement of this high to this low, was not able to sustain that. Then it has actually moved lower, and now it's finding support from the 61.8% retracement again. So it is in this range bound formation right here. Here we go. Now the key thing is there's a possibility that we might be in an ABCD formation to the downside. That remains a possibility, or we could be in an ABCD formation to the upside, where it is going to go and make new all-time highs. Now the key thing is, okay, if it begins to close below on a consecutive closing basis below $230 per share level, probably we are in this ABCD to the downside, and the market could rotate to maybe 210. Now if we are actually able to take these highs out, then it's a resumption to the upside with the ABCD making all-time highs. So I think we'll just have to wait and see how the market will move from a price action perspective, range bound market, but the stock is looking good. It is pretty much the price is hovering around the 20-day moving average and the 89-day moving average nearby as well. So if the stock do decide to move to the upside, what we can then anticipate is that these averages, the 20 period moving average and 89 period moving average, once they begin to diverge, like they begin to form a big gap like this and the gap begins to increase, that's going to be an indication of a strong momentum move in play, and that's the kind of thing the bulls will like to see, and we can then anticipate an ABCD formation taking the stock to new highs. So if I were to draw it, it'll look like something like this. There we go. So it'll go and challenge, maybe take out these highs and form new all-time highs. Now let's take a look at these Amazon stock. Here we go. So Amazon has been hit hard, pretty hard, but it's also doing something really, really interesting now. So this is the weekly chart of Amazon, and once it had completed this big ABCD, where the CD leg was 1.272 times the AB leg, we also had this another smaller ABCD one-to-one price projection completing in this blue. So because of the confluence of these two, we were looking for a possible strong resistance, and this is what we have seen, and the stock has actually retraced nearly 21%. That's a big chunk of a retracement. Now something really, really interesting is that the stock is actually sitting right at the 38.2% retracement of the October 2023 lows. Now I'm not drawing the lows of the 2020, the lows it made back in 2022, but if I did, I think this is gonna be about 23.6% retracement. We can have a quick look and see right here, and the price actually went a little bit lower, but it's in that ballpark figure. So this is a pretty large retracement, and what we have seen is in the past, this is how much it had retraced, which is about 23%. So again, it's also coming in that ballpark figure. So if we were to look in absolute terms, it has actually done that retracement. So that is the market symmetry concept. So pretty much where the stock closed, we could look at a possibility that the stock might be in the bottoming process, and further price action, if it remains bullish, would be an early indication that perhaps things are turning, and the pressure to the downside, it might be abating. So that is when we are going to go and take a look at this on this daily chart. And here you can see that the stock had been in channel formation, tried to break above the channel, not able to sustain that, move back right in here, and the candle formation is more like what's the word for it, kind of a gravestone doji formation. Need further confirmation here, but what we have discussed on the weekly chart, I think it's at those really key price levels where the stock might be actually starting a bottoming process. So that's what we're looking at in Amazon stock. So these, some of these stocks are doing some really, although the market had been under a lot of stress, but today these are some really, really key price levels and pattern formation. So we have looked at Tesla, we looked at Avgo, which is Broadcom.com, and then Amazon. So many of them. Let's take a look at Google. So Google has been under a lot of pressure. Let's actually go and take a look at this in the weekly chart. Here we go. So I thought that Google might have put in a important high around here, around the 194 level, and for a number of weeks it actually did, and then some news came out with regards to quantum chips or something. We saw a rally making new all-time highs, and then now we are looking at is a retracement, and this stock has actually got the potential to retrace even further, maybe around 140 levels. So we'll have to wait and watch and see. But where it is, or the levels it is getting close to, I think it's close to getting close to some sort of support level as well. But the kind of rally that we are seeing, it might turn out to be a dead cat bounce, or maybe something like this take place and then there's falter. So we'll have to wait and see. It's not one of my favorite stocks at the moment, so I'm just looking at it, that perhaps it's got some some amount of downside. I will wait and see what how the price action will pan out. And now let's take a look at some other stock that we like to follow, which is NVIDIA. Here we go. NVIDIA has also pulled back right into this box, which it had done before as well. It found good support from here, then resistance, boom, and now back in here. It's below this trend line. So this is one stock that I think we have to be a little bit careful from a price action perspective. Maybe it could have nice rallies, but the rallies could get sold off um, since June of 2024. Maybe the stock in some sort of a distribution pattern. I do not know exactly, but what we have actually witnessed is that it rallies pretty hard as well. Then the rallies get sold, and it just remains in a range bound formation, but is providing really nice trading opportunities if you are a shorter term trader. Now, if we just take a look at this on the weekly chart, long-time subscribers, they will actually recall that we had drawn this pattern formation with the 154 level as our target, and with the slight possibility if it was really bullish, maybe 171, but this is where the pattern formation was. We had the ABCD, we had some symmetry here because of this pattern, and then we have just seen these highs not taken out till now, and it has actually broken below on the weekly basis below this trend line. So there is a possibility on the weekly basis remains negative. Maybe it just goes sideways for quite some time, and some of these moving averages just catch up with it. So Nvidia, I think it is a great stock if you're a trader. If you're a longer term investor, maybe I think further price action on the weekly chart, if it begins to improve, I might be might require some patience. Now, if we take a look at AMD, here we go. So a subscriber had actually asked me to chart this, and I did. And on the weekly chart, just want to reiterate, um, it had actually at one stage it was really a nice stock. Then it hit these technical levels, and of course things were changing fundamentally. I don't know exactly what, but from a technical perspective, we were hitting some of these key patterns, and then we have seen a nice retracement. Now, where this stock is right now, I'm going to show that to you on the weekly, on the daily chart. The momentum is really, really, bearish for this stock, but it's also hitting these key levels. So ABCD, this black one that completed, the price has actually moved a little bit lower. So I think the key is to keep on watching this. There was a point right here which was also one of our target points because of this blue ABCD and the black one nearby, that the market actually might find some support, which it did. It bounced a little bit, found resistance, and it's just broken below. So right now, I think we should be watching this really, really carefully, whether today on Friday the stock actually formed some sort of a double bottom price action. We'll have to wait and see. And then, of course, I think some consolidation should take place, the moving averages, and so the momentum begins to improve as well. And one of the things that I've actually been highlighting is that if someone is really looking to be bullish on the stock or to take a position alongside, I think we should wait for the momentum to get better, and then perhaps it might not be a bad idea to wait, and this will require a lot of patience, that we get a retracement and buy that retracement, because then you'll have a nice place where you can put your stop loss and adjust your trading size accordingly. You do whatever you have to. It's not a financial advice, but the market is likely to give us the opportunity. Right now, I think some of these bigger cycles, they're also bottoming, so we should be watching this really, really carefully, where the price is right now. I do have an expansion level a little bit lower, but that's of a lesser importance level. The bigger one was this black ABCD right here. So we'll just keep on watching this. Let's keep this on our radar. AMD with the deep seek coming, where they were able to actually train their models using the standard open source algorithms available using chips from NVIDIA, but not their most advanced chips. Maybe the sentiment around NVIDIA's leadership might change, and some of these other stocks which are doing really well, maybe they might be also improving their products. So their stocks are really beaten down. So there might be a case that the shorts begin to get out of the market. Maybe there is some new buying that might come in, and that could propel the market higher. So we'll have to wait and see. Finally, last but not least, let's take a look at Roblox. Here we go. So the Roblox also pulled back. And this is the kind of thing we were watching for. If you recall, I had drawn this pattern. If the stock could do that, it has pretty much done that, or it might have done the first leg of it. We might see some further corrective action. ABCD maybe up, and then maybe a final one, or it might have been just the final. I do not know exactly. So further pending further price action, but the stock has pulled back. But I would like to point out, by just going on to the weekly chart, that the stock met our target of 38.2% retracement, and now we are just watching the price action. It's pulled back right into the structural support. So let's see next week if we get a positive week. I think things will begin to look better for the Roblox stockholders. So thank you very much for watching the video. If you enjoyed the video, learned something, please give it a thumbs up. And if you like our technical analysis, how we use pattern recognition, Fibonacci, retracements, projections, extensions, and expansions to forecast the markets, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you very much. Speak to you guys soon, and good luck, good trading.